Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app. It's been a great honor to know him. His public commitment to the United States from coming out of San Diego is a young buck out of Annapolis. James Stavridis joins us now. And Admiral, and of course his work with Carlyle is noted. Admiral Stavridis, I want to get down to the granular because I don't think enough of the granulars talked. Somebody has to pay for a Magura V5 drone so it can sink a modest-sized ship of the Russian Navy. Is Washington saying to Ukraine as a generalization that we're not going to pay for a Magura V5 drone or whatever so that we can assist you?
Yeah, that's the message being delivered to Kyiv right now. It's immensely frustrating to anybody who cares about the security of the country, Tom. And it's not just drones, it's artillery shells, it's ATACMS, long-range missiles, it's getting the F-16s onto the battlefield. All of that, we are failing the cause of freedom. Final thought, it's $60 billion. That's okay, an amount of money. Our defense budget is $900 billion. Right. So for 5% of our defense budget, we break the Russian armed forces, defeat Vladimir Putin. This is a business show. That sounds like a pretty good ROI to me.
How close are we to Lend-Lease or before Lend-Lease, 1938, 1939, where basically isolationist America said we don't want to participate at that time in a European war? Is this just nothing more than an isolationist debate of a global America?
I think it is. It feels eerily like the 1930s. Go back and read the first volume of Winston Churchill's magisterial 6-volume set, the Second World War. It's called The Gathering Storm. That's what it feels like to me.
And it feels like to me, folks, if you want to read it, particularly the kids out there, War and Remembrance, Herman Valk, which is just shocking on 1938, is a fiction. Paul, jump in here with Admiral Stavridis.
Admiral, can you give us, based upon your sourcing, kind of the latest on the battlefield in Ukraine today?
I can. No surprise. As supplies dwindle to the Ukrainians, it puts real lift in the Russian armed forces. So they're moving forward. It's not yet the end of the road for Ukraine, but you can feel the wind behind the sails of Vladimir Putin. And by the way, it's all connected to his arrogance, his impunity in killing Alexander Navalny over the last few days. All of this is giving real lift on the battlefield to the Russians. We better get this military aid to the Ukrainians, or we're going to see more losses, and the hole that's being dug will be much harder to get out of.
Admiral, I think most students of history take away that, boy, the Russian people, the Russian army can take untold amounts of pain and time. Is there any sense that Russia will bend here at all, other than, I guess, a superior military?
I think it's going to require continued significant aid from the West. And yes, Russians can take a lot of pain. Go back and read One Day in the Life of Ivan Denisovich by the Nobel laureate Alexander Solzhenitsyn. It's about someone in a gulag. These are tough people, and Putin is a tough, long-range player. But his soldiers are dying in the hundreds of thousands. Hundreds of thousands of young men have departed the country, Russia, to avoid the draft. Long term, it's not a good hand of cards. We just need to keep our foot on the accelerator.
All right. James Stavridis with us, the former NATO Supreme Commander. Program note here, the new Foreign Affairs magazine is extraordinary. Neil Ferguson, the great and controversial historian, with a definitive essay there on just what the Admiral was talking about, which is the detente, the new kind of theme that's out there of a Kissinger realist policy versus whatever the new policy is that we're making up as we go. I want to go to our conversation, Admiral, on Bloomberg Surveillance moments ago with a member of the Biden administration. And Jon Ferro asked the money question. What about India? I have hockey stick charts of exports from Kazakhstan and India into Russia. What is our political and military leverage with Mr. Modi as he faces a new election?
First, let's let him get through his election. 900 million people literally are going to go to the polls and vote in India. I think he'll win a strong poll. Then he'll come back with real confidence in his third term. I think that's when we can go to him off stage and say, what will it take? Can we pull you away from this support line you are providing to Russia? You're right, Tom. India is the key. China is going to continue to support Putin. India is the swing vote here. We need to focus on them.
I'm going to go there, folks. We're going to rip up the script here with James Stavridis. Ramachandra Guha, who's the definitive Gandhi biographer, has a blistering essay here begging the United States to impart its policy over to India as they actually become somewhat dominant with a struggling China. Do we have any military presence over there, Admiral? Do we exist in the Indian Sea or the South, whatever this ocean is there, from South Africa, Durban, on the way over to Indonesia?
Yeah, Tom, that would be the Indian Ocean.
Thank
it's
you.
the third largest ocean.
That's why, Admiral, you were on the boat and I was driving the taxi cab.
So we have a strong level of presence there because we sail through it both from the Pacific side and from the Red Sea side into the Arabian Gulf. We could do a lot more militarily with the Indians, and the Indian military, I assure you, would like to come more into focus with the United States, buy more of our systems. For decades, they've been reliant on Russia. That's another piece of this. If we can insert U.S. military cooperation with our Indian colleagues, I think we would go a long way toward pulling India in our direction.
Admiral, let's pivot slightly to the Middle East. Talk about another challenging situation there. What is your most up-to-date view of how this is playing out and is likely to play out over the coming weeks?
Humanitarian crisis, most obviously, hostages on top of it. That is going to continue to fester for probably 2 to 3 more months while the Israelis fully consolidate control. They're trying to reduce collateral damage. They're succeeding somewhat in doing so. That frame is going to freeze in 2 to 3 months. Then a peacekeeping force will come in. Things will deaccelerate at that point. The one I'm watching from an investment perspective are the attacks, the Red Sea, the potential effective closure of the Suez Canal by the Houthis. We're going to need to put more military missiles on targets ashore in order to stop that and keep the global commerce open. Those are the two main things I'm watching.
Are you surprised that maybe we haven't had more success in that area in gaining greater control over the Red Sea and its shipping lanes?
I'm not surprised, simply because Iran continues to refuel, recharge, organize, train, and equip the Houthis. Right now, we're striking Houthi targets ashore. If Iran does not get the message to cease and desist, we're going to have to start going after Iranian maritime targets, their ships, their warships, their platforms. I hope we don't get there, but that message has to get to Tehran. It's not going to get solved in Yemen.
Admiral, with great respect to the British, their ships can't get out of the harbor. I mean, I'm not going to mince words, and we have a prime minister out of Southampton with all that heritage. Our pride going, and this goes to the Admiral's book of Stavridis. Admiral, I'm so sorry. Remind me the name of your book where you line up 10 admirals in a row.
It's called Sailing True North.
Sailing True North. Rickover sailed True North because he had a budget. Zumwalt sailed True North because he had a budget. Does our present Navy have a budget? Or are we going to be stuck in Southampton or Portsmouth like the British Navy?
Yeah, on a scale that runs from the British challenges you're talking about, which are very real, to a fully sourced U.S. Navy that can undertake its global mission, we're about 3/4 of the way to where we should be, meaning we have about 300 warships. I'll put it in really round numbers.
Please.
We need about 350 warships. That would match what China has. China has the largest fleet in the world. If you ask me as an admiral, which fleet would I rather have in a fight, I'd still take the American fleet because of our experience, our nuclear carriers, our submarine technology. But that edge we have is dwindling, Tom. We need to put emphasis on the maritime because everything we've talked about goes back to the sea and the oceans and the ability to keep global commerce moving.
And that's the subject of a recent column of yours, Admiral. Russia's new threat is underwater, not in space. Can you explain that?
Yeah, we had a week where we were all shocked to hear from the intelligence community that, Russia's thinking about putting a nuclear weapon in space. That would be bad. They haven't done it yet. They don't really have that technology yet. What they do have is the ability to disrupt underwater cables that carry the entire internet. Only 500 cables carry the entire global internet, all the commerce, 10 trillion transactions a day. Those are vulnerable targets on the bottom of the sea. Russia could go after them today.
I have to end with a delicate question, and given his public service for all Americans, whatever their political persuasion, it's delicate. Should the Secretary of Defense, Admiral, so ill, should he resign?
He should do what his health demands. If he has the health and the vigor to act as Secretary of Defense, Lloyd Austin, a contemporary of mine, he should remain in office as long as his health permits.
James Stavridis, thank you so much. Can't say enough about Leader's Bookshelf.
Yep.
It's just one of my favorite books. I'll put that out here in the blur today as well. The former Supreme NATO Commander. Just a terrific brief there. Joining us now, the tennis player from Princeton, Andrew Husby, here on the Economics of the Moment. He's with a small French bank. Do you get, Andrew, I'm going to cut to the chase. Forget about the BNP Paribas U.S. Open tickets. Are you over in Paris at the best tennis court in the world? Are you watching out of the BNP Paribas box the French Open with that just gorgeous green that they have?
Unfortunately, Tom, I'm not, but certainly missing out on that experience right now.
It's great. I wandered into the courts one day when I was like 15 years old. It's like magical. It's like surreal. With BNP Paribas and Carl Riccadonna, Andrew Husby with us this morning. Andrew, Paul and I have like completely ignored the parlor game. Give us an update on what you believe this Fed would do.
Sure. Well, thanks, Tom. So at the moment, we think this is a Fed, and we're hearing it in the Fed speak we've seen really since the December meeting. This is a Fed that is very cautious about cutting too early here. Coming into this year, think about the narrative. A lot of folks were thinking we might get a cut as soon as March, maybe even January. Yeah. But the narrative has really shifted here. Our team did not subscribe to the March cut view.
Yes.
We had been up until last year, up until last week rather, been in the May camp. But we do think the January CPI report, along with the accumulation of stronger data, really does make us think that the Fed is going to move even a bit later than that. So we think ultimately it will be a June cut and a shallower path this year of cuts than we had previously envisioned. We see about 100 basis points of cuts this year. as the Fed kind of eyes, again, the stronger inflation backdrop and most importantly, a stronger economic growth backdrop, which, there's an argument to be made that stronger growth itself can be disinflationary if the supply side is coming back, but it's hard to bet too strongly on that. So we think in that environment, the Fed stays pretty cautious here.
Well, what's so important here, folks, is the overlay of stimulus. Are we through the stimulus? Because I've had whispers this week. I'm sorry, Andrew, we're distracted with Nvidia. I apologize. But with it and Andrew, are we beyond the stimulus? I'm not so sure.
It doesn't feel like it's all fully run off, whether you're thinking about the excess savings built up over the pandemic. Yes, a lot of that is run down, but you look at the after effects on, say, the equity market, there's a attendant wealth effect still coming through there. And as we're looking ahead to, just again, where deficits are, they're still high. And as we look ahead to the election, you're still looking at potential catalysts that could catalyze a more expansionary fiscal policy after the election, too. So all of that suggests, it certainly hasn't all run out just yet.
Hey, Andrew, I think since the January inflation data, the CPI and the PPI data came out, we've actually had some people come into the studio and say, hey, you have to have in your scenario analysis a scenario where the Fed actually hikes rates this year. What do you think about that?
Yeah, so certainly at the moment, we're thinking that sort of a scenario involves the Fed just staying on hold for longer, unless we really think that the so-called neutral rate in the economy is really substantially higher and really remains substantially higher for this year, next year. It still feels as though policy is restrictive. We're seeing it in the data flow. We're seeing it certainly in the inflation data itself. Inflation has come down pretty substantially. So it tells us that things are moving in the right direction. But certainly, could the Fed hike again? You can entertain scenarios, but that's far from our base case at the moment. Again, we're focused on duration at the current level, not added hikes.
So how about one of the aspects of this economy that continues to amaze me is the labor market, how strong the labor market remains. Some are saying that the Fed really needs to see the unemployment rate, maybe move above 4%, maybe 4.5%. How are you guys thinking about this U.S. labor market?
Yeah, it's been surprising, both in terms of the strength we saw in the last two jobs reports. You're seeing job growth above 300,000 a month. And it's also surprising in that some of the revisions we've seen kind of reshape the path. So not only is recent job growth stronger, but it was stronger at the end of last year. And that's meant more income, more spending and the like. Now, the question for us, when you look at factors like labor supply, we've seen a pretty substantial rebound in labor supply. And recently, even the CBO had come out with a report saying actually the potential labor force is actually potentially much larger on account of immigration and the like. So, to us it says strong job growth. It's in part a function of businesses being a bit more confident as recession risk has faded, as the risk of further Fed hikes has faded. So there's an incentive to potentially hire a bit more here. Go ahead.
Well, I don't mean to go ahead, but the research note is extraordinary. I mean, the Rick Adana, the concision of what Husby's doing with Rick Adana and the team over there is extraordinary. Into the weekend, Andrew, what's the item of inflation that we need to think about? When you sort out X number of components, what's the one you're watching into March?
So at the moment, I know it's been a refrain for some time now, but it is really that services number, X housing. We've seen a lot of progress on goods. We expect that to continue through the first part of this year. But we think that there is a relationship between labor slack and that core services component of inflation. And in the January report, that was quite strong, pointing to, there may be some quirks here. It's the start of the year, businesses reset prices and the like. So we'll need to see a few more reports here to really be thinking about a dramatically different outlook here. But it really is services prices for us.
I can't say enough about this. Andrew Husby, thank you so much. Don't be a stranger with BNP Paribas, their senior U.S. economist. Without question for Global Wall Street, this is the conversation of the day. Gene Munster with us across the next half hour. I can't say enough about his work from Piper Jaffray long ago. It was research that made you stop, and we're thrilled that he could join us today from Deepwater Asset Management. Gene, I quote from pre-pandemic CapEx, Microsoft, 15 billion, 21, 23, 28, 35. And they're going to buy from Nvidia enough where we've got a modeled CapEx out 14 months, 15 months of $45 billion. Do you have a vision of how that money's spent, the efficacy of it, the safety of it for our listeners and viewers, this global CapEx off Nvidia?
Love the topic, Tom. And it's not just Microsoft, it's Google, it's Apple. They haven't said as much. Meta has said this 30%. That's kind of the benchmark, 30% increase in their compute. And so when we think about this, these layers of AI, there's two parts to the question. One is, what does the ramp look like? And this is a 30% step up. If you look at Jensen Huang's comments from Nvidia this week, he talked about the chip, the GPU market being several $100 billion over the next few years. It's about $100 billion today. So that kind of plays along this trajectory of 25% growth. I think what your listeners should take away here is that there is a significant investment, a massive investment going on from these hyperscalers, these big tech companies. This is the first of 4 waves of investment that will probably last a decade. Wow. And as far as what it means for our lives, I think it's going to be the most profound change, much more than what the internet was. Last time we spoke about the spectrum that I have in terms of how to think about AI relative to our lives. I put a spectrum of 0 to 100. Electricity is 100. The PC was a 20, mobile 25, internet 50, and AI is 99. And it would be 100 if not for needing that electricity. So this is a big deal. And I think that your listeners should just take away that the significance of this change is going to be more profound than the internet.
Gene, I want to frame this as something maybe we understand, unlike experts like you. I think of all the other compatriots in tech, Dan Ives and such. And that is, there was the Model T, which was like, okay, well, that's a fad. And then in 1927, 1930-ish, the Model A showed up, and Alfred Sloan was over at GM trying to make magic happen. And it was like, whoa, wait, this automobile is going to be a real deal. Maybe it's actually going to work. Where are we within that continuum? Are we looking at AI as a fad? Are we to the Model A? Or are we to the Ford F-150 pickup truck where it's entrenched, AI's entrenched in society?
So from the impact to society right now, it's a Model T, and it is, we're just still scratching the surface. And just to put some context on that, is that most of that spend, when we see this just breathtaking change in NVIDIA's business, I want to just take a pause for a moment and put how breathtaking of a change this is. NVIDIA's business for the previous 3 quarters before the AI liftoff was down an average of 17% per quarter. This business was in the toilet. And it has now, since the 3 quarters that it's taken a step up, it is up 200% on average per quarter. And so what we're seeing is this dramatic step up. And when we think about most of that spend, the vast majority of it has been related to those hyperscalers building the Model T. It's related to, but there has been an important data point that Jensen Huang talked about in the NVIDIA call, is that 40% they now believe of their current sales of chips are currently powering inference. Inference is what comes out of the model. When you go into ChatGPT and put in a prompt and you get something back out, that's something that you get back out is called an inference. And so what that means is that people are actually using this. This is not big tech spending a bunch of money to build something that they hope people will come. This is big tech recognizing that the behavior is already there, even though it's nascent. It's taking off in concert, in lockstep with what their investment is. And so when I think about, we're going to go from the Model T to the F-150 to the Cybertruck in about 3 to 5 years. And I think when you put that type of a scope and scale, most of the commentary I hear is this is an NVIDIA-led rally, and this is, are we getting bubble-ish? We're not even close to bubble. Bubble is when the market trades at 100 times earnings. we're at 28 times.
Paul, Microsoft, $415 per share.
It's been another great way to play. Gene, I have to admit here in cocktail parties, I definitely use your kind of spectrum thing there, talking about electricity and where AI fits in. I give you full credit, though. I want you to know. But
appreciate that. Thank you, Paul.
It works. It really takes people's breath away, to just give it some context. So, Gene, I want to talk about competition here. When are the AMDs of the world or the other chip makers going to step up and be real competitive here? Maybe some of the customers, like an Apple, saying, hey, we can build our own chips. Talk to us about how you think competition is going to evolve.
So look for competition to start to have a meaningful impact on, at least on Nvidia's business, probably in 2 to 3 years. And specifically, as we think about AMD, they're actually getting some traction. They're actually putting a significant effort into GPUs. Intel has just started that, but it's still just too nascent. We're talking about low single-digit % market share of GPUs. AMD is kind of around that 10%. Nvidia is around 85%. And so what it is, the most important point to your question is it's not just about what the absolute market share is today, it's about what the trend in the market share is. Is AMD going to gain share? And my expectations is over the next couple of years, NVIDIA's market share is probably going to be 70% or above. They may lose a little bit. They'll lose probably most of it to AMD, but it's still going to be huge share in what is a quickly growing market. Beyond that 3 to 5 years, that's when things start to get more difficult. And I believe that AMD is going higher. I believe eventually, 3 to 5 years, it's going to hit the wall because of what you talked about. Ultimately, these hyperscalers are going to back off. Right. But one of the benefits that NVIDIA has here is that they will lose business to the hyperscalers when they come out with their own chips. But it's unlikely those hyperscalers sell their chips to third parties. And if you think about these 4 waves of AI, there's still 3 more waves that need to be powered by publicly available GPUs like NVIDIA.
Right. Paul, to frame NVIDIA at 400 in the quiet of November last year, to surge now to 820, up nicely from yesterday, this is critical, folks. It's only 2.6 standard deviations. That goes to Mr. Munster's comments that the exuberance really isn't there technically, like you'd think given the hype and the uproar.
Exactly. So, but NVIDIA at its core, Gene, it's a chip company. And what I've learned, I'm not a tech analyst, but what I've learned from reading tech research is that's a really cyclical business. So once I sell a chip to a customer, it's not like a software as a service where they're going to give me recurring revenue. That's kind of it for a while. So is there a tail end to this thing?
There is. That's why you see that I think 3 to 5 years is that NVIDIA is going to hit the wall. There's going to be a very dark day. We're going to have this boom and bust. I wanted to highlight kind of that scar tissue in terms of what their business has done before because of that dynamic that you talked about. And that eventually will come. The question isn't that, I see the question more as what's the duration of this run? And I would come back to those 4 pillars just to recap them. We're currently in right now the infrastructure build phase. Then we're going to go to applications. That's like Copilot, ServiceNow, Salesforce. And then it's going to be heavy industry doing generative AI. And then lastly, countries with sovereign AI. And so there's, I think that, yes, there once everybody's full, but it's we're still got a long way to go before we get full with these chips.
We're with Gene Munster of Deepwater, and it is a great thrill. I think of Harsh Kumar over in the slot Gene used to have at Piper of Minnesota. Good morning to all of you listening up at Piper Jaffrey Country. And Gene Munster, it's like the Muppets thing. One of these teams is not playing like the other teams or whatever the Muppets song is. I got Microsoft up, Nvidia up, the whole thing, and Apple's giving me no love at all. I mean, you know, Harsh has a neutral on it over at Piper. With or Apple, are they under a pressure to do something given the tech nirvana of the last 3 months?
Yes, excruciating pressure. Of course, Tim Cook did not utter those 2 letters in all of 2023. He did proactively talk about AI for the first time in their December earnings call. I think that was a marked moment, and they're going to have something to say about AI, he said, this year. Most likely that's going to be in June at their developer conference, and most likely they will announce a foundation model. These are really the core engines that all these AI applications are built on. So Apple's the big challenge with Apple is they haven't grown for the past 6 quarters. It basically is a flat business if you kind of average it all out. And they haven't said anything about AI. And I think that they're in a great place to surprise people on AI this year.
Right. Let's surprise people, Paul. And Paul's been leading on this. He's been screaming about this his first gray hair. Paul, free cash flow, $70 billion is now $113. Revenue, $274 million is $413 million from the pandemic. And the answer here is they're minting profit. And as Mr. Munster says, they're not growing.
I know. And so how about a dividend for some folks here, a meaningful dividend, but that's not in Tim Cook's wheelhouse. Hey, Gene, one of the things I'm looking for as this AI sector industry mania kind of continues to evolve is kind of the bellwether IPO. And I know at Deepwater, you guys see lots of early stage companies here. And I'm looking for like an AOL, America Online was for the consumer internet, search we identify with Google, social we identify with Facebook. Do you think there's going to be an AI company come public that just blows everybody away?
Yes, we're really excited about that. I think that's probably a year, 2 years away, but we're going to see a cast of foundational AI companies. These are not companies benefiting from AI. If you think about where AI sits, like with inside Microsoft or what it will be in Apple or Meta, it's a small piece of it, but these companies are they're companies like Hugging Face. This is an open platform for AI models. Many of you haven't heard of them. And I think that there's other companies like Anduril, which uses a lot of AI with defense. And then this is going to be the one potentially, I think this will be the biggest surprise relative to up-and-comers and will be one of these mega cap tech companies is X.AI, Elon's company. And what he did is, I put this in the category of he's 80% genius, 20% luckiest man on earth. The Twitter purchase, this X.AI owns about 20% of that. They will use that data, which is the world's best data when it comes to real-time intention. That is critical data. They'll use that to inform and build the X.AI foundation model. And that is a massive opportunity. The message that Elon's had, he refers to this as a truth-seeking AI. There's been some comical things that have gone on in the image generation AI space relative to Google this week, which sets this X.AI up for a massive opportunity. I believe this will hands down be Elon's greatest source of wealth, X.AI. He's currently, based on Bloomberg, he's worth $210 billion today. X.AI, I believe, will be a public company in the next 3 years. And I think it's going to be one of those mega cap AI companies.
That's good stuff. I mean, again, Elon seemingly in the nexus of everything of interest out there. All right, so when I see a market grow like this is growing, and I see a mania around a certain situation like AI, I guess in the back of my mind, I also think, Gene, boy, it just feels like Washington is going to feel like it needs to get involved here in regulating some of this. What do you think? How do you think Washington views AI, and is that a risk?
It's a risk. I mean, Washington has a general view that big tech, of course, needs to be regulated. The AI conversation has more layers to it, of course, because of the national security piece to it. Is when you think about national defense, whether it's intelligence gathering, whether it's how some of these systems work, whether it's just how our country's GDP evolves powered by AI, having a sovereign, a strong AI, a strong tech is something that benefits the government. So when I think about government regulation over the past 5 years relative to big tech, it has been things around like the App Store or engagement around Instagram. They've been about Microsoft buying Activision. These things are petty compared to what is at stake when it comes to AI. And I think that ultimately, that significance is going to benefit big tech.
Gene, one final question, completely unfair. Let's go back to Piper Jaffray, single best buy, hold, sell with Gene Munster. Can you acquire shares of Nvidia this morning?
Yes, I think Nvidia is going to go higher. I think that based on my expectations, this is not investment advice. This is just how I see it. I think that this should appreciate at about 15% a year for the next 2 to 3 years. I don't think We're going to have this massive growth, but I think this continues just to march higher based on all the things we're talking about. If you believe in AI, believe it's as big as I believe it is, Nvidia is going higher.
This is the class act. Most people, Paul, would have avoided that question.
Yep.
Gene Munster nailed it. Gene, honored to have you for a half hour be on this historic week, this historic Thursday that we've seen. Gene Munster with Deepwater. Daily headlines. I'll look at the front pages. Lisa Mateo, avec le journal.
That's pretty good. Yeah. I never took French. All right, so we're starting with the Wall Street Journal. This is an interesting story because it's saying Meta knew about parents exploiting their own children with new paid subscription tools, and they did nothing about it. Now, this is disturbing on so many levels. First of all, the parents. These are parent-managed accounts. They're using subscription feature to sell exclusive content. Their daughters wearing bikinis, wearing leotards, no nudity, but it was sold to an audience that's overwhelmingly male. Some expressed essential interest in the children in their comments and posts, so the parents knew what was going on. Teams inside Meta, they started raising alarms about this. They tried to warn Meta. Meta's response is that they built this automated system to prevent it from happening, but it just didn't work. So this is just crazy on so many different levels.
Yeah, starting with the parents, and
yes.
That's where it's got to go. All right, what else?
So we've heard about the returning to the moon, right, for the first time. All right, this one is another piece of history. It was college students. The lander actually took a selfie as it landed. It was made by graduate students. This camera from Embry-Riddle Aeronautical University in Daytona Beach, in Florida. And that is actually the alma mater of Intuitive Machines CEO. So that's the connection to the school
Great
right
aerospace program. The aerospace program.
Yeah, it took them like 4 years to make it. And so it's this little box ejected from the lander, and it was and it worked. And they took the picture. Cool. And what's crazy is that a lot of the graduate students who did this, they weren't alive when the first landing happened.
Yeah, I don't think we were taking selfies back in 1972, as I recall, with our Instamatic or whatever we had, the Kodak.
It was something, and I literally remember the day up in Rochester when Hasselblad won the contract to be the camera that the astronauts carried around. That was a dark day. They were looking for the Instamatic to be going. That didn't quite work out. What else do you have?
This is the Financial Times. We were talking about the luxury market yesterday. So it says the LVMH is turning to Hollywood to promote a lot of their brands. It's a new venture. Yeah. It's called 22 Montaigne. My French accent is not as well as yours.
You're killing it.
I killed it.
Brooklyn.
The Brooklyn French accent.
in Brooklyn. It's a YouTube channel.
But it's a collaboration with them and Superconnector Studios. So this is this company that connects brands to production companies. So they want to start doing advertising, product placement, original products, TV, film. And you kind of seen it. Remember Breakfast with Tiffany's? You've seen it there.
Well, that's where you see it
But
at
House
Tiffany's.
of Gucci, you've seen it.
You walk by Tiffany's and there's the Audrey window, and I think up second or third floor, John's got the Audrey dress. Guess what? Beyonce's driving the ship. I mean, the Arnault family is doing what you're talking about.
And this will be overseen by Antoine Arnault, who's the eldest son
of
the founder, Bernard. So it's probably Bernard saying, I got to give my son something
to do.
Oh, no, they have a whole bunch of, there's a whole bunch of sons.
I know.
And the daughter runs Christian Dior. Can I do a TV shout out this weekend?
Yes.
The new look, I can't say enough about it on Apple TV. It's about all that Lisa Mateo's talking about, folks, about Coco Chanel and Christian Dior, and it's shocking how they hated each other. And that was all in the background of the 1940s and the 1950s. It's just a home run.
I got to check it out.
It's great. They all wear bow ties. Is that it? Are you done?
One more. We have to get to the Vision Pro users. Okay, there's a warning.
That's so yesterday.
From the San Diego police. They are putting out a warning. They're saying don't use them when you're crossing the street because apparently people are doing that.
Yeah, and they're getting run over.
It's dangerous.
Yeah.
And they posted a video. They're just warning people. They say keep the virtual experiences on the sidewalk, folks.
Yep. Crazy.
But you've seen it. You've seen that. You've seen pictures of people driving with the vision goggles on. I don't know
how that works. I don't know how that works.
Very dangerous.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.